Imagine a world where you can get a mortgage with no deposit. This is what we're going to be focusing on in this episode of the Mortgage Mum podcast, where I'm joined by Rachael Hunnisett, who is the Director of Distribution at a new lender to the UK, April Mortgages. This is a lender you're going to be hearing a lot more about because today they are launching a disruptive, groundbreaking product, which means that 100% loan-to-value mortgages are back on the market. And no, there are no strings, there are no secrets. This is a genuine 100% mortgage for first-time buyers and home movers, and you're going to get the inside look at this lender and this product today. So Rachael, thank you so much for coming on the Mortgage Mum podcast at what is going to be such an exciting time. I'm so excited to talk about this.
Yes, we actually get to say it out loud, which
I know.
is wonderful.
It still feels like a top secret bit of information right now.
Well, it is.
I know. As we record it is, but soon when it's released, it's going to be public. And that is that 100% loan to value mortgages are coming to the market.
Absolutely. Absolutely. And like I said, it feels strange to be saying it out loud because we've been holding this in for so long as we've been planning and really refining the product. And I know we'll get into loads of the detail anyway, but really you spend so long thinking about the customer and you spend so long thinking about the target market that then you get to a couple of weeks away from launch now at time of recording. And you think, I really hope this lands the way we've planned it to land.
Yeah.
And so, it's actually just a relief to have this secret outside of my brain for the purposes of recording today.
Good. So tell us about this product in one sentence.
So one sentence is a challenge, but I will. So of course, it's we're launching our no deposit mortgage. We've launched it to be as inclusive as possible with no strings, not loads of red tape, a really accessible product that is available for lots of different type of buyers, regardless of whether you're a first-time buyer, a next-time buyer, mostly regardless of your income type. There's a low minimum threshold. We wanted to make sure that we really are bringing home ownership to people that might not have an opportunity to get on the ladder otherwise, and that felt really important to us.
Amazing. And what do you have to earn to get this product?
So the minimum household income is 24,000.
24,000, no deposit.
Yep.
Is there anything hidden there? Any kind of other fees you need to be paying instead of a
deposit?
No,
you'll pay an application fee and a completion fee, which your mortgage advisor will talk you through. Is at the part when you do the kind of advice process. So it's really important to flag this is only available through mortgage advisors and only available actually through quite a select few. We've got quite a restricted panel at April. We really work with advisors that we drive close partnerships with to make sure that quality of advice is very high, to make sure that they really understand our product, really understand the features and benefits of the product, but also the things to be aware of. So the advisor would go through that every stage with the customer.
And the Mortgage Mum is one of these.
It is,
select
of course.
Partners.
It would be a bizarre podcast if not.
Wouldn't it? It would be a very good sales pitch from me.
Yeah.
So talk to us about the selection process then. So I think for people listening, they might be wondering, can I get this mortgage without a broker? And if not, why not? Why did you choose to just go through the advisor route?
Yeah, so it's really important. A lot of our propositions, so we aim to, our mission is to disrupt the UK mortgage market and really make it a better, fairer, more modern place. And if I peel a layer back from the no deposit mortgage to begin with and think about our products as a whole, we believe in long-term certainty. We believe in taking people out of this traditional roulette wheel of continually worrying about their mortgage and just actually going, look, have peace of mind. Think about the long term. Think about what you want for your future and make your mortgage work for you rather than every 2 years having to get yourself in a position where you're thinking, oh, crikey, I really want to buy a car, but I'll wait another year because my mortgage is up, and all these things that we just think about in life to get our mortgage ready. How can we just support people to go, you know what? I'm not going to think about it. I'm planning for my future and I'm prioritising that and I have that certainty. So when you think about the product design, it lends itself so incredibly well to a fully advised process. We want someone to really think through their own personal appetite to risk, sit down with an advisor and think, okay, well, what would I do if in 2 years' time rates were loads higher? What would I do if in 2 years' time rates were loads lower? What's my personal liquidity, technical term? How much cash do I actually have? How much spare money is there on a monthly budget? Yeah. How would changes in rates in the future impact me? But not only me, might be a family, might be for me, if my mortgage payment went up, football classes would go, ballet classes would go, all of those things. So really think about the holistic life cycle of what you do with your mortgage. And we believe that absolutely the right thing in that is to go through an advisor, an independent advisor that's really got your best needs at heart, that can look at the whole situation and give really good advice based on that.
So let's dive into that a bit, because some people that listen are advisors themselves, so they'll be really interested in this product. Other people that listen are trying to educate themselves on the mortgage market and really trying to understand how they can get on the property ladder and what this might mean for them. So let's dive into that topic that you just quite rightly brought up there, which is what the property market is right now. Our traditional approach is that we choose a rate for 2 years or 5 years, and that's the majority of people say, should I choose a 2 year or a 5 year? They don't say, should I choose a 2 year, 5 year, 10 year or 15 year?
Yeah.
So let's talk a little bit more about that. So what are April mortgages, whom people might not have heard of? So we're going to talk about that in a minute. But what are they doing differently? And why does that matter?
Okay, so if you're a borrower listening in, I might be about to blow your mind, so stick with us. So traditionally, actually, if you think about Europe, actually most of the world, mortgages are viewed as a long-term loan. The word mortgage, my favourite pub quiz fact, is it actually means death pledge, mortality gauge pledge. So even the word mortgage, even the word mortgage references the long-term nature of this loan, right? But we have in the UK normalise shorter term lending. And there's a lot of reasons for that. The funding mechanisms, the way that lenders are funded, I won't get massively into that today, but if anyone would like to, happy to do a follow-up podcast on funding. And the way that the kind of risk weighting sits, I believe, perhaps controversially, I believe that a lot of that sits with the customer. So if you think about traditional lending, let's say you've got savings money in. So the easiest way to think about that for a customer, think about an ISA. And think about you put some money into an ISA, let's say £10,000, and lots of other customers do the same. So let's say the bank's got, let's say £200,000 sat of cash. What can they do with that? Well, they're going to lend that out on a mortgage, put a margin on it, and they're going to go, right, I've got two years worth of ISA money that's locked in, and I've got a mortgage going out for 2 years, and I've got a margin in the middle. The risk within that transaction doesn't really sit with the consumer, because you've got your FSCS protected, so your financial services compensation scheme protected, and you can always get your money out at any point. For the lender, they've underwritten that customer. They've got security over the property. It's quite low risk relatively for a lender, a 2 year fix, because traditionally after then you go on to standard variable rates. The mortgage payments get much higher unless you fix back in. But for a customer, they've taken on the biggest debt of their life with absolutely no certainty in 2 years' time what that will be. And you can look to the money markets and say, well, where do we assume rates will be in 5-10 years' time? And if you think, oh, actually, I think it's going to be much less than what the money markets are saying, you're betting against the market. And to take, and we've normalised that level of risk, so we don't really think about it. And when you speak to your friends about risk, you might say, oh, yeah, I've gone for a tracker, not a fix, or a fixed versus. That's usually the perception of risk, right? But if you go, okay, I'd like you to put £5,000, whatever feels like a large sum of money, £1,000, whatever relatively feels like a large sum of money to you, I'd like you to put that in an envelope. And I'd like you to write on it what you think mortgage rates will be in 2 years from now. And if you get that right, you get that money back. And if you don't, that money's mine. How many people would feel that confident that they'd put money in that envelope? I don't think a lot. But realistically, that's what you're doing when you go short. You're betting your house on the swaps market. You're gambling with the biggest debt of your life. And for some people, that pays off. And for some people, it doesn't. And for some people, the risk appetite will be comfortable to that. They go, actually, yeah, I've got plenty of disposable money. If my mortgage payment went up by £400, I'm comfortable with that. Others might go, actually, I'd prefer to spend a little bit more and know that I've got that guarantee that for the next 10 years, the next 15 years, nothing's going to change. In fact, I'll get onto it later, but with our proposition, your rate actually comes down. But we know that that's the absolute maximum. So if you fixed and your mortgage payment is £1,500 a month, that's all it's ever going to be during that fixed period. And if you think about it, it might seem like quite an abstract concept, but if you think about it in different ways, an example I use quite a lot is car finance. If we went off to buy a car this week and they said, right, you've got two options. You've got one car that's the same car, one finance deal is £450 a month for the first 6 months, and then it goes on to a variable rate. It's £700 contractually. You might be able to refix. Depends what's going on in the economy. What will the rate be? Oh, I'll tell you about that then. Don't worry about that then. But it's £400 for the first. Or you could say, okay, actually, you can pay a little bit more, £450, let's say, and that's then guaranteed for the whole time of that car. We know that most customers would go, or a decent proportion of customers would go, I'd rather just have the peace of mind. And that really explains the concept of what April are bringing to the UK market, which is think bigger than just cheapest is best. Think about actually what serves your circumstances, and that might be that cheapest is best because you've got enough cash that you've got enough of a buffer, you've got enough access to capital. That means that if circumstances were to change or your rate were to change dramatically, you can absorb that. But if you can't, think about how you're hedging your bets, think about how you're protecting yourself in that environment. So the whole April proposition sits so well alongside what the Mortgage Mum tried to do, which is, or actually, and we'll re-record that, you can edit that, what the Mortgage Mum do already as part of that advice process, which is to really think, what do you want from life? What are your dreams? What are you trying to achieve? Let's make sure that your finance aligns really well to that. Let's put you in the best possible position. And that's what the brand is all about. That's what April's all about.
So let's talk about April then. April Mortgages is quite new, lender to the UK, but quite an established lender in other areas. So they're Dutch origin, right?
Yeah.
So let's talk about that, because this is really normal in the Netherlands, isn't it? This is a really normal concept. So let's educate people, because maybe they don't know that the Dutch consider our 2-year, 5-year fixed rate environment to be really unusual and, like you say, very high risk.
Yeah.
But you get used to what you know, don't you? So let's talk about that.
You'll be fascinated how many people I bump into at events where they say, oh, I used to live in Spain, or I used to live in Denmark, and this is so normal, and we're so surprised that no one's done this before. So yeah, completely. It's a bit about us. Our parent company is an asset manager called DMF Co. And our founders were two fantastic Dutchmen who were brilliant, if you ever get a chance to spend some time with them, who looked at mortgage lending and thought, this is really overcomplicated. This hedging model, this lots of different funds pooling coming from lots of different areas. There must be a simpler way to do this. So simplicity is like really part of our DNA right from the very, very beginning. And they started DMF Co. and launched a brand in the Netherlands called Munt, M-U-N-T. And very quickly, pretty much walked the same path that we've walked, brought out a product that really did work for long term, that gave you all of the flexibility that you need with going short, but all of the peace of mind and certainty of going long. So all of the things that people normally worry about when you're going for long term, like massive early redemption charges that tie you in for a long time, or your rate being stuck static at possibly the highest loan to value banding, where you might want to refinance in a couple of years and get a slightly better rate, or I might be about to have a bonus or inherit some money and therefore I'll pay a chunk of my mortgage off when it matures. All of those things that would restrict you if you were to go long, they just got rid of them. They just red penned all of them and went, look, we can make this so much simpler. Let's just start. And actually, when I joined April, I've worked for many lenders, let me start again. When I joined April, I've worked with other lenders in the past, and you kind of have a policy book that's that thick. And for the purpose of podcast, I'm doing big hands. And April's proposition is so simple. It was really light reading, and I thought, this is incredible, because there's no kind of this product comes with those bells and whistles, and this product. It's just a really simple proposition that you could explain to your aunt, or you could explain to your, as I often do, my 10-year-old son. He's always my litmus test for, does this make sense outside of my head? So that's the path they've already walked in the Netherlands. We've been established for 10 years now. We were a top 5 lender in the Netherlands last year, top 300 asset manager globally. So although we're new to the UK, we're certainly not new to lending. We've got lots of experience in-house. Some of the Dutch team work over in our Houston office. So it's wonderful for me, because I get the joy of working for a startup with none of the associated risk of working at a startup. So I'm just having the best time.
That's amazing. And I want to talk more about your journey to April as well, which we'll come on to. So let's just summarise then. We've got 100% loan to value product. And of course, it's not the only product April do, but this is the headline product right now. So we're talking 100% loan to value, which means no deposit. You need to earn £24,000 a year to qualify. You can be a first-time buyer or a home mover. Yeah. But you're going to be fixing your rate for at least 10 years.
Yep.
However, you were going to come on to this. What happens if they want to move?
Yeah. So we hope people come and stay with us forever. That's kind of behind the branding no strings, is if you don't want to, if you move into your house and a year later you decide your neighbours are awful, or you decide your partner's awful, whatever the reason is, we want to make sure that you can move on with your life, move forward with your life without being penalised. That was really important. I'll come on to the first time buyer piece as well, because there's a few parts of this product design when we were going into it that I felt incredibly passionate about. And that's one of them, was that we make sure that we're not stopping people from just moving forward with their life. So we don't charge redemption penalties at all if for any reason other than if a customer was to refinance to another lender. So if they choose, I don't want this mortgage anymore, I want another mortgage, and I'm going to remortgage while I'm still in this property within the fixed period. Any other reason, you need to relocate to support your family because you've had illness, or you want to just move because you don't like your neighbours anymore. Any other reason you can think of, there's no redemption charge at all. We also allow uncapped overpayments. So for people looking to reduce their mortgage balance down as quick as possible, so alluded to earlier, all of our rates reduce as the loan to value comes down.
Okay.
So if you're looking at mortgage thinking, oh, I want to get to the next loan to value banding, but I'm £2,000 off, pay that off, your rate will drop immediately. Okay. So we really want people to feel financially empowered by this product and make sure that this is the thing that helps them on their way, on their journey. And that's the other kind of half of that is we didn't restrict it to just first-time buyers. That would be quite easy to just do that, but we think actually there's very little support. I don't mind sharing on the Mortgage Mum podcast. It's a safe place. When I went through my divorce, the only option for me was to go into rented because all of my equity was stuck in a house. Yeah. And it took 3 years to sell. And the impact that had on my life, my children's life, having to move into rented, having the insecurity and instability, actually moved 3 times, but that's a story for another podcast. And I think what difference that would have made in my life, having been able to buy a secure home for me and my kids and just have that peace of mind and certainty and knowing exactly what and paying towards a future, but rather than for me personally, I was just paying rent, which is just poof, disappeared into thin air.
So 100% loan to value, minimum income 24,000, no early repayment charge, but you are fixing a rate for 10 years. Yeah. But if you want to move house, as long as you're not just taking your mortgage to another lender, there's no early repayment charge.
Yeah, and you don't have to port. That's the point. So you literally redeem in full. You move and you redeem. Yeah.
Pay it off. Yeah. And you can make as many overpayments as you want to.
Absolutely.
So what I'm hearing is you're giving back the control to the customer. You're really showing them you are in control for the next 10 years. If you want to pay your mortgage down, you're going to get a better rate for every 5%. Yeah. If you don't have to. If you want to move home, you can move home and pay us off completely if your circumstances change. So this is a completely refreshing way of giving advice.
Thank you. Yeah.
It is. It's groundbreaking. You know how excited we are. So what do you think are going to be the biggest negative comments, should we say, the biggest doubts, concerns and worries about this when you post it on TikTok? What are the comments going to say from the people who don't get it? Yeah. Or who think if something is too good to be true, it usually is?
Yeah, absolutely. Living for the comments on TikTok. Look, I think it's really important. The inbox is always open. If people have got questions, I want them to ask them. I think people are nervous of change, nervous of disruption, nervous of the status quo changing. The mortgage market we have works okay. It serves some people. The biggest fear I have is that we're driving the gap between the haves and the have-nots further. So we've seen so much innovation and great innovation, and I commend it in the space of if you've got family wealth, if you've got bank of mum and dad, if you've got the bank of auntie, uncle that can come in and step in and help you. There's been very, very little progress for people that haven't got family wealth. And by family wealth, I don't just mean cash gifts. I mean the space to hold you as an adult while you live and save, while you're stuck at home with your parents, perhaps with your partner too, saving, paying them peppercorn rent perhaps, so that you can save for a deposit. Not everyone has that social environment. Not everyone grows up in that environment. And I think back to why I came into mortgages. My absolute purpose is to try and make my corner of the mortgage market a slightly better place than it was when I found it. I definitely feel like I'm living out this passion with this product. I'll absolutely take a fair bit of heat for concerns about 100% lending, concerns about, and really valid concerns about how we support people to stay in their homes for a really long time. And that's why we spent so long. That's why I've been holding on to this secret since January, Sarah. Really making sure that we get this product design right, because we're not afraid to be brave. We're not afraid to be bold. When you're a challenger lender, you know that you're walking the path that others haven't walked before. But we feel incredibly passionately about serving these customers, and that's our laser focus. Remind me of this on the 16th of May when I'm under fire. But the hope is that we just shut out the noise and remember what's really important to us, and that is the customer at the end of it. That is those people holding those keys, whether they're first-time buyers, whether they're rebuilding their life, whatever stage of life they're at. We want to really focus on that, and that's what we've done all of this for.
I love that, and I think I think some of the key things are going to be, this is like the credit crunch, negative equity is going to quickly follow. This is irresponsible lending. I really want us on this podcast today to really demonstrate why there's strategy behind that, why the FCA have approved this product. You can't just launch products into the market. You've got to go to the FCA. They've got to be comfortable that it's safe for consumers, that you thought about everything. And that really comes down to the longer term fixed rate, doesn't it? So could you explain that to our listeners a little bit so they can really understand how are April doing this, and some of the bigger high street banks perhaps aren't taking that risk?
Yeah, so kind of maybe there's 3 parts to answer that question. The difference between now and look, no one knows what the future holds. That's kind of the whole point of our proposition, right? If we could all accurately predict what's happening 2 years from now, we'd definitely be a lot richer than we are. Yeah. So, we'd be down the betting shop, Sarah. So I think it's really relevant that we look at what happened in 2008 and we make sure that it was a long time ago, but still a lot of people that are in housing now remember that time. And it's important that we recognise the differences. A lot of that was subprime lending. A lot of that was subprime lending. We had self-cert back then. We had subprime lending that was securitized and put into bundles and securitized upon securitized. And a very, very different environment to taking long-term funding, which was what we do. Our funding line is primarily pension fund, long-term fund. People are looking for a long-term return on investment, not a short-term quick fix.
So let me pause you there and don't lose your train of thought.
Yeah, I should have brought a notepad.
So I promise I will take you right back there.
Brilliant.
But lenders are funded by other people's money. You said that yourself with ISAs. Yeah. So you're saying the way your lending is funded is through people that want a longer term investment.
Yes, exactly.
So pension providers.
Yeah. Rather than chasing that short term return, we look to match longer term money in with longer term money out. Again,
fascinating.
All the way through our proposition. Simple, right? Yeah. We've not taken 40 different savings products and merged it together on a balance sheet to put out a loan. We don't have to do complicated accounting for that. It's really, really simple. If you've got a mortgage with us and you want to know where the money came from, we can tell you. We know exactly on our system where that's come from. And that's really important. Funnily enough, and I will come on to it, but I went to work for a lender to work. I was a mortgage broker first. Yeah. And the first lender I went to work is because I didn't understand fully where the money came from. And I was just chasing this question of where does it come from? And I was fascinated by just how does a lender actually work? Yeah. So this one is super simple to understand. So if you're out there, if the broker's listening and the customer's listening, if you're thinking, I don't know where mortgage money comes from, you're not alone. I was there for a very long time too. So that's fine. You're amongst friends here.
So let me take it back to where you were and you were explaining why April are able to take that risk and why it isn't similar to the credit crunch, though it might look like irresponsible lending, why it's very much not the case.
Yeah, I absolutely stand by incredibly responsible lending, making sure that we absolutely have our customer front and centre of the product design. So the 100% lending or no deposit lending is available on 10 and 15-year products only. So one of the concerns with doing higher loan-to-value lending is, well, in 2 years' time when your product's up, who can you refinance to? Because there's quite a few lenders out in the marketplace doing that. So we really wanted to make sure that we're protecting customers from that perspective. We've looked at house price data over a long period of time and made sure that actually if you look at longer periods, you tend to be a bit more protected. But I'm definitely not going to say it and record it because it will come back to haunt me in, where are we, 2035, I'll be sat here. So I'm not going to make a prediction for 10 years time on where house prices will be, but we've taken a degreed level of comfort in that you look back and backwards is an awful way to look if you ever want to make predictions, because actually the economy is constantly changing and growing and evolving, and what they say, the pace of change has never been so fast and will never be this slow again, right? So that's kind of the whole point of our position, is trying not to predict the future, is just going on what we know. So we want to make sure that the customers have got that absolute certainty, and then when they get to the end of that 10 years, they can product transfer with us, they can pick another product with us, they're free to go anywhere they want, they're free to refinance another lender, whatever works for them best. We'll support all customers at that end. The really important thing is, first and foremost, only available through intermediaries, so for mortgage advisors. So part of a fully advised process that really looks at, is this the right thing for a customer? Yeah. And then equally, we've specifically designed the product to make sure that they've got all of the security of that product being with them for 10 years. But equally, if they need to get out, they can, and we'll support them in that.
And presumably they'll have paid a lot of their balance, or a significant chunk, you'd like to think anyway, in 10 years of mortgage payments.
Yeah.
So that's another element.
And the rate reduces all the way through.
Yeah.
So that rate you're buying on and those rates are locked in at the time you do the application.
Okay.
So there's no uncertainty. You're completely in control of your finances.
Yeah.
You can see, right, okay, well, in 2 years' time, it's due to go down to X%. I won't quote rates because it will never get through FinProm sign off. But it's down to go to X%.
But
it goes down with every loan to value banding, the rate reduces.
Fantastic. So Rachel, let's come on to you a little bit because in this podcast, I feel like you've already demonstrated your depth of your knowledge about this industry and how it's all kind of coming together in this moment for you as a woman in the mortgage industry. And here at the Mortgage Mum, you know, we're all about women supporting women. We love to see women rising in the industry and seeing fresh talent coming in. So let's talk a little bit about you. Which probably is less comfortable.
It's so much less comfortable
talking about April. But I think for those people listening, I just want them to come away with knowing all about the product, but also knowing about who is this Rachel? She really knows her stuff now. So tell us a little bit. So how old were you when you entered the mortgage industry, and how did you come into it in the first place?
Okay, so yes, you're right. It's so much easier to talk about your employer, isn't it, than being yourself. So I kind of got all the way back. I started my career actually in horse racing. I worked for stud yards and breeding. I actually left school when I was 12.
12?
Yeah, I was 12.
My goodness.
How had I told you that? Yeah, so I left school when I was 12. I completed most of year 7, and at that point I then
you did not. I would have put you down as an A-star
I was definitely not an A-star student. I don't have a GCSE actually.
Wow.
So I was technically homeschooled, but did very little because I was really interested in horses, so I did that instead. So I worked in horse racing and breeding and bloodlines. I trained at National Stud. I was really interested in that, and then a couple of things happened. I was a teenager, so big emotions. My favourite horse died. Lots of horses died. But my favourite horse died. And I just had this moment of, is this really for me? But by the time I was 16, I was working 5 jobs. I was always laser focused on wanting to buy a house. That was my absolute North Star.
Wow.
I had quite a turbulent family environment, so all I wanted to do was get out. Yeah. So my biggest driver, so I was working pub jobs, I was working admin jobs, I had a little side hustle of riding people's horses. I'd charge them £20 an hour for. And when you're 16, £20 an hour is still a huge amount of money, but it's a lot of money. So I was saving really hard. And then I had this moment of no one around me there was no one around. I always think it's really important and you're a big one for this, and I'm massive. That's why we clicked so quickly. Is where are you going? What do you want to achieve in life? Where are you going with it? And there was no one around me whose life I wanted, and that could sound quite rude, and I don't mean it to. I just looked around and went, okay, this thing I'm working in horse racing is hard. It's graft. You're up on the yard 6-7 days a week. It's early mornings. It's late finishes, and I was like, is this the life I really want? And I was doing a few things. I was doing a bit of property networking, which I won't go into. And I knew a property investor. And I said, look, I want to work for you. Don't pay me anything. I just want to learn from you. And at the end of 3 months, if you think that I'm worth some money, pay me. Well, he saw me coming a mile off, Sarah, because he never paid me a thing. And I worked really hard for 3 months. But in amongst all of that, he had a friend who was a mortgage advisor. And that's how I learned how to set up CRM systems and do VAT returns and things like that. Anyway, I then, he had a mortgage advisor friend who said, I've got a job going if you fancy doing a bit of mortgage advice admin. And I thought, well, how hard can it be? It'll be fine. She said, would you ever be interested in qualifying? And I was like, I've never thought about it. Because I just assumed, because I'd never went to school, I had such a chip on my shoulder about I'll never get a proper job. I'll always have to just graft my own way because no one serious is ever going to take me seriously. I had such a chip on. I just thought and then I Googled CMAP, and you didn't need an entry-level qualification for it.
That's so true, actually. You don't.
Yeah, this is my moment. And that's what I am so passionate about finance, about as a career. And there's so many of my friends have ended up being mortgage advisors because there really isn't many careers left that are really socially mobile in that way, where regardless of your background, you don't have to have gone to uni, you don't have to have had parents that have funded you. You can just get in, work hard and do well. And I love that about financial services.
That's so true.
Yeah, it really is. So if you're young out there, CMAP's a great qualification. LIBF will thank me for that. So I got rejected for the job, the admin job. And I was really upset by it. So I went home and booked my CMAP and thought, you're not going to tell me I can't work in mortgages. I've decided. I've been thinking about this for a week now, so it's going to happen. So I went home and booked my CMAP, and I was at the age where I was 18 then, and I was at an age where lots of my friends were going off to uni. Didn't really know what they wanted to do. We're just going to go and do something, and thought hopefully. And I thought that's not for me. Like I've always laser focused. That's really. So I googled all the firms near me. And I went through Google and I rang every single one of them. And I said, look, I'm thinking of doing this exam called a CMAP. I would like to work for you one day. Is this the kind of job where you would hire me at the end? Or do I need to know someone? Or do I need to have had years of experience? Because I haven't got any experience, but I'd like to do the job. And the first one just kind of, like batted me away. But the second one, someone answered the phone called Joanne. I still remember the call. And she said, look, I'm not the right person to talk to, but our managing director's back in the business later. I'll get him to give you a call. And I thought, oh, cool. I carried on ringing down my list. Not many people wanted to talk to me, but I was keeping busy. And then, yes, my then boss, who later became to be my boss, Steve, rang me back and said, this is how it works. If you ever want to talk to someone about it, pop by the office. And I was like, great, what are you doing tomorrow at 9? And he was like, you can come in. And by 12 o'clock the following day, he'd employed me.
Amazing.
I started there. Yeah.
So you were a mortgage advisor and then you started working for a lender.
Yep. Yeah. So I went in, I did 3 years of advice, had my son, which was such a fantastic job to fit around childcare. Yeah. And then I had a friend who was BDM for a lender. And I said, when you move on, I'd be interested in that. That sounds quite interesting. And then he said, I am actually moving on at the end of this year. I was like, brilliant, great, fabulous. Yeah. So I applied and I didn't. And actually I had the most awkward moment because the boss of the firm I was at, I'd called in sick to work that day as an advisor. I got on the train and sat down next to the owner of the firm. So not the owner of the firm that I was working for. He said, you're supposed to be sick today.
No.
And I was like, no, I'm on my way for an interview. No. I know, so I was so thrown by it. So all of it, I'm a big prepper, even more, I was even worse then. So I had these folders of I'd read their corporate policies. I really, really wanted to get this job. And I thought, oh my goodness, it's completely thrown me. Yeah. And then I probably won't mention them, although it's on my LinkedIn, so you can find it. But Building Society I went to interview for, who will always have a special place in my heart because they did give me my big break. Yeah. Their basement, they haven't got the building anymore, but it was like a basement in Holborn, and you go down these stairs, it's a dark place, and the three of them sat at one end and I was sat at the other end of the boardroom table, and I just kind of made a joke. I was like, are you going to get the spotlight out and I think in that moment I got the job.
Yeah, just being yourself.
Yeah, and they were just brilliant. And really, again, I remember when my boss, who became to get on out of my boss, John, phoned me to offer me the job. I was like, I'm so grateful for this opportunity and I promise I won't let you down. Aww. And it just was my moment, and I just, took it. I was convinced I'd go back to lending at some point, and then I got promoted and moved into different roles, and I had the best time learning about where money came from, which was great. So that was my university and I loved it. So I was BDM for London and South East by the time I was 22. And had the best 6 years at that Building Society ever. It was brilliant. It taught me so much.
That is a remarkable story. And I know you exited the industry for a little while and started working on the green agenda. Yeah. And now you're back at April. April is the thing that drew you back in.
Oh yes, boy did it. Yeah, so I went and did a sidestep. It kind of, the sabbatical doesn't feel right, but a sidestep into sustainability. I spent 20 months in the end working with lots of different lenders on how they can be more sustainable, both front of house and green mortgages, but also within their businesses more broadly. And that was absolutely brilliant. And I was having a lovely time. I had an incredible team, worked for my family. And then I got a call saying go for a coffee. And I was like, no, it's okay. And then I go for coffee. So I went for coffee, and within 10 minutes, I was like, this is incredible. I love everything this is about. I really feel like it's ticking. For me, I kind of have key areas in my career that have to be ticked in order for me to be happy. Kind of, I need to feel like I'm stretching myself in knowledge. I need to feel like I've got that kind of purpose driven. I need to feel like I'm doing something that's kind of benefiting.
Meaningful.
Yeah, meaningful. It's really got to align with me. There are proper words for them, but I can't remember them off the top of my head. But there's a kind of 3 key pillars. And I thought, this is like a triple tick for me. I just love it. And my brilliant boss, Mark, who's our COO, spent a long time trying to talk me out of it. I was like, it's going to be hard. It's going to be a lot of. And I was like, no, I'm 100% here for it. And that's how I ended up here. And don't regret it for a second. I've loved every single second of my job. I started in September, and there's not been a day when I haven't just danced into work. I just love it.
So nice. And this, I feel, is a real key moment, not just for the mortgage market, not just for the customers out there who don't know this is coming. This could change so many people's lives.
I get butterflies as you say that, because this is 2 weeks before launch.
Yeah, these people out there that don't realise something's coming that could mean they can buy a property this year or next year, and that can change their life. But I feel like it's a really big moment in your career too. You know, it's huge for April, huge for the industry, huge for us in the Mortgage Mum. You know, we're right next to you at the front of this. But a very pinnacle moment for you, Rachael. So I'm really excited for you as an individual. I think there's certain moments in your career, so I really want you to take it in as you walk through this, navigate it. And I'm quite excited that we're recording this before what I think is going to be one of your stories, you know?
And you know what? Credit to the April team as well, because it definitely isn't. You know, we're an incredibly high-performing team. I work with the most brilliant minds in the industry. Our head of products is incredible. Our head of credit risk is incredible. Our head of compliance is incredible. Everyone just works together. For moments like this to happen, it does take a village, right? And everyone in the business approaches with a can-do attitude. How we look at a problem and don't go, we go, right, how can we find a way around it? How can we move forward? And a little bit of that is Dutch working culture. But I definitely remember being in a meeting with our head of compliance, Steph, recently, and we were both like, oh my goodness me, you'd put our workload on a whiteboard, you'd be like, ah. And I turned to Steph and said, Steph, when we're 70, we will remember these weeks. The weeks like running up to this launch, we'll remember them forever. Yeah. This is the time where we just digged, and we both kind of smiled and went, yeah, this is us. We're digging deep.
This is the rocking chair chats, I call them, where, you know, you imagine who you're sitting with on a rocking chair.
Oh, I love
reflecting, going, and when I was this age, this happened. And let me tell you, it was one of the best times of my life.
Well, I hope so. And if you're commenting on articles, you know, be kind.
Be kind. Be open-minded.
Yeah, that's it. You know, and think about who the current market's serving and who the current market isn't serving. And it's really, really easy to keep your eyes closed, your blinkers on, and just keep doing what you've always done. Meanwhile, people that come from backgrounds that don't necessarily have access to all the things that our current homeowner type have are just being forgotten about. And I don't believe that's okay. And I will fight on the hills if need be to make sure that I continue to champion the needs of those people, because that's the background I came from, and I really believe in trying to make homeownership accessible.
That is the perfect note to finish on, Rachael. Thank you so much for spending your time with us today. I know we're going to be doing more together in the coming months, but thank you so much.
Thank you for having me. What an absolute pleasure. I've listened to so many of your podcasts. I'm so grateful to be here. So yeah, huge thanks, and to you and the fellow mortgage mums, because you're all just really raising the bar of advice, really raising the standards, really championing customers, and that I'm so aligned to that. So it's lovely to see you doing well as well.
Thank you so much.